What we can see is, for example, Venezuela. Venezuela is maybe the best opportunity in our universe since maybe 15 years.
So how have the huge inflows of 2016 impacted the asset class?
Actually, it was interesting to see inflows this year. Actually, just before the Brexit, we have had actually 8 billion of inflows in dollar within our asset class. And the months just after Brexit, we have seen that more than 40 billion of dollar within our inflows. So the consequence was directly positive for the asset. Why? Because at the end of the day, the more demand we see and the more price are moved to upside. So it was clearly positive for our asset.
Do we still have liquidity in the emerging market debt?
Alors, which is interesting is the fact that with this increase of inflows within our asset class, at the end of the day, it could be a risk for us, because when we see a comeback of volatility on our asset class, most of the time we can see volatile investors starting to sell their exposure on the universe. So that's why for us it's really important to have flows within our portfolio to hedge our investor against redemption and actually to benefit from the potential outflows and sell-off, to be opportunistic and to invest again in our asset class.
So what are the main risks?
The main risk today for us is maybe China. China for different reasons. The first one is all real estate sector, which contribute for a large part of the growth. The second risk is clearly the leverage in China, which represents right now more than 250% in terms of debt under GDP ratio. So at the end of the day, China is a completely mispriced risk on our global universe, and not only on EM but also on developed market, and it's just a systemic risk. That's why it's really important to be hedged against Chinese risk, and to be hedged right now when the hedge are quite cheaper and completely underestimated by the global market and global investors.
So what are the opportunities coming out of the emerging markets?
For us, our focus is first one to be hedged against the global environment, to have cash to hedge the portfolio regarding potential outflows, redemption, etc. To be hedged against China, for example, and global and within the global environment. But it's interesting to be focused on real risk-reward opportunities on our asset class. What we can see is, for example, Venezuela. Venezuela is maybe the best opportunity in our universe since maybe 15 years. Why? For different reasons. The first one is Venezuela is a kind of mood, as we have seen in Latin America, in Argentina, Brazil, with the political transition. In Venezuela, we start to see that with a population actually who start to be angry against the current government, military which has always support Nicolas Maduro and the Chavismo party, start to change their behavior and to be more focused on the willingness of the population. So there is a real transition in political side. There is really a potential of reform regarding FX system or, for example, energy subsidies. It's already started, but it could be bigger. But the mood is positive, the trend is positive. And last but not least, the risk reward. Today for Venezuela bond, you are close to 50 cents to the par, and which is really interesting regarding the potential recovery value globally. Roughly, the average recovery value on the emerging market countries sovereign debt is close to 66. So for us, even if there is a default in Venezuela, the downside versus upside is clearly positive for the upside. So that's why we are really confident on Venezuela, and we think that it's maybe the best potential for the next couple of months, years on our asset class.
Well, thank you, Romain Bordenave, for joining us today.
Thank you, Kurt.